Welcome to my channel. An annuity is an insurance contract you can use to create an income stream. You can purchase an annuity to draw payments against in retirement as a supplement to tax advantaged or taxable savings accounts. But what if you want to sell your annuity and get immediate cash? Here why you selling your annuity is something you might consider. Consider working with a financial advisor as you consider how to increase your cash flow in retirement. Why sell your annuity? Selling your annuity lets you trade future payments for immediate cash. There are several reasons for selling your annuity. Here are some of the most common. Inflation is shrinking the purchasing power of your annuity payments. You need the money to pay for education costs for yourself or your child. Selling would allow you to pay off high interest debt. An unexpected life change such as a divorce or the death of a spouse means you have immediate needs. You are buying a home or renovating the one you own. One of your children is getting married or buying a home and you want to help with the costs. You need money for business growth. You are covering your retirement travel plans with a cash cushion. You inherited an annuity and you need money to cover burial or other final expenses. You are covering significant medical bills from a serious illness or injury. You lose your job and can't find a new one. You rather invest the money directly in the stock. You may have an entirely different reason for wanting to sell your annuity, but the end result is the same: trading annuity payments for a lump sum of cash. That's the biggest advantage of selling an annuity. You can get money without having to take out a loan, drain your IRA, or liquidate your savings accounts. The downside is that you reduce some or all of your future income from the annuity, depending on how you choose to sell it. How selling your annuity for cash work? There are three ways you can sell your annuity: a partial sale, a sale in its entirety, or lump sum sales. Here how they compare. Partial annuity sale: this sells your payments from the annuity for a set period of time. For example, say your annuity that covers you for life and you are 40-year-old. You can sell payments for 5 years. Once that 5-year period ends, you will continue receiving periodic payments from the annuity. The upside of this option is that you are not sacrificing your annuity payments permanently. Instead, you are putting them on hold temporarily in exchange for immediate cash. You can meet your current financial needs and still get money from the annuity once you are ready to retire. What is lump sum sale? A lump sum sale is similar to a partial sale. In the same vein, you can still receive payments from the annuity at a future date. However, instead of selling your annuity payments for a set period of time, you are selling a lump sum of the annuity payouts you are entitled to receive. So if you need $50,000 to start a business, for example, you could perform a lump sum sale of that amount of benefits. This option gives you more control over how much cash you receive and what's paid out from the annuity. With a partial sale, the payouts amount may be less exact depending on the number of payments you forego. A lump sum sale assigns an exact dollar amount that you want to receive in cash. Entirely sale: Lastly, selling an annuity in its entirety means you give up your remaining interest in the contract. Consequently, you get all of the money that's left to be paid from the contract in one go with no future payments. This can be the easiest way to sell your annuity because there's no negotiating lump sum amounts or a partial payment term. How to sell your annuity? Selling an annuity is a legal process, therefore, there are certain steps you need to take to do it correctly. Firstly, you may want to talk to your financial advisor about whether selling an annuity is the right move and which sale options is best. Secondly, you will need to research companies that buy annuities for cash. There are a number of companies that purchase annuities and structured settlements. What you want to consider when comparing them is how much value they will give you for your annuity. Typically, you will receive between 60 to 80% of what the annuity is worth in cash. Also, some companies may offer more or less. Taking time to shop around ensures that you get the best deal possible. Reputable companies should be able to give you quotes or estimates free of charge. Once you get quotes, you can sell your annuity to a settlement company. At this point, you will have to complete paperwork related to the sale and schedule a court date for a hearing. Only a judge can approve the sale of an annuity. You can use the attorney provided by the settlement company or choose your own to represent you. Assuming the hearing goes smoothly, the process ends with you receiving payment. You can then use the cash as you see fit. Annuity sale and caveats. There are a couple of cautions to keep in mind. Firstly, you may face tax consequences for selling your annuity. If a structured settlement is not taxable when you receive it, then it generally retains its tax advantageous status when you sell. But if annuity payments are subject to ordinary income tax when you receive them, as would be the case with a granted income annuity for retirement, then you owe as much income tax on the cash as you would a regular distribution. Secondly, if you are received structured payments from a divorce, settlements, child support, distribution, veterans benefits, or social security, you can't sell those payments for cash. These are the some retirement tips, guys, you want to read out, and I hope you can enjoy today video. I upload many insurance related videos on the channel. I hope you don't forget subscribe my channel and meet you in the next video.